From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome to U.S. Farm Report. I'm Tyne Morgan, and here's what we're working on for you this weekend before Thanksgiving. The House passes its tax overhaul plan, but is it good for ag?
There's going to be winners and losers anytime you're dealing with legislation like this.
As NAFTA negotiations kick back up, bankers are watching trade and farm finances.
As the saying goes, history doesn't repeat itself, but it sure does rhyme.
But what can farmers do to survive? That's our Farm Journal report. It's a common theme playing out in farm country.
Yields were surprisingly better than I was expecting.
So what does that mean for equipment sales? We're on the road with Machinery Pete. And in John's world,
big crops and 2018.
U.S. Farm Report is brought to you by Chevy Silverado. High-strength steel for high-strength dependability.
Now for the news. The fifth round of NAFTA negotiations are now underway in Mexico. But one U.S. leader is partially blaming agriculture for the controversy surrounding getting a new deal done. After a short hiatus from NAFTA 2.0 negotiations, leaders from the three nations kicked off meetings in Mexico Wednesday. U.S. Commerce Secretary Wilbur Ross supported the president's hard stance on NAFTA, saying that striking a new deal by early 2018 is enormously complex. But he does expect some sort of deal to be made, as he said NAFTA is on a very short time fuse. But Ross is also blaming agriculture for making negotiations harder. Speaking this week, he threw a punch at agriculture, faulting ag groups for screaming and yelling, only complicating the process. Now, many ag leaders say nixing NAFTA is not an option.
I'll put it this way. So Dave Cole on a Sunday conference at the ABA conference, he said, without NAFTA, we're looking at the 1980s. And I have to agree with him. NAFTA is a big part of our trade package. NAFTA delivers a lot of ag export markets, and without it, I think we're going to see a pretty significant decline in sales and revenues for our farmers.
I mean, if you were to remove it quickly, you're talking serious depression here. I mean, just think about corn and soybean prices. Now we've got a huge crop. Where's it going to go? Some of it's going to go to our NAFTA partners. And when it does that, that helps prices here.
Now, there is some headway being made. Mexico said this week that it's reevaluating NAFTA every 5 years that they're in support of. But the country says it doesn't want to see NAFTA lapse after 5 years. With U.S. lawmakers also focused on tax reform, expectations are that the key issues within NAFTA won't be sorted through until 2018. Well, the NAFTA talks coming on the heels of President Trump's whirlwind trip to Asia, a trip the president called a great success. It's a fair deal that the president has been stressing since the campaign trail, and that's something the president said he also worked toward with key economies in Asia.
I think one of the things we really accomplished big is relationship, and also letting people know that from now on things are going to be reciprocal. We can't have trade deficits of 30, 40, 50 billion, 300 billion in the case of China. We can't do that. We have to have reciprocal trade. What's good for them is good for us.
The focus is on trade, and exports this past year hit the third highest level on record. But China is now the new top buyer of U.S. agricultural goods, beating out Canada. USDA says exports for the 2017 fiscal year reached $140.5 billion. That's a jump of $10.9 billion from 2016. Now, China beating Canada as the United States' largest export customer this year. Canada's buys from the U.S. did increase, but not enough to cushion China's large jump. And Mexico continues to be number 3, but exports did grow 6%. Ag Secretary Sonny Perdue says the ag sector posted an annual trade surplus of $21.3 billion, a 30% spike from last year.
Agriculture's national forecast is brought to you by Elevo Seed Treatment from Bayer.
All right, those are the headlines. Meteorologist Mike Hoffman joins us now with weather. Mike, as many viewers prepare to travel for the Thanksgiving holiday, could weather cause any disruptions for some?
For some time, but it really looks like most of the lower 48 not going to see a lot of activity as we head through Wednesday, Thursday, and Friday later this week. Here's the drought monitor. We'll take a look at that first. Parts of Missouri, but especially Arkansas down into the Texarkana area. Severe drought has developed over the past few weeks, continuing to be severe to extreme in parts of South Dakota, Montana, and even a few spots in North Dakota. But we go back a month, and you can see how we were beginning to get dry in the central plain states of the Arkansas, Missouri region. We lost the dryness in the Northeast from that one big storm that came through, and we've started to get even drier, like I said, across parts of Arkansas and Missouri. So let's go day by day this week. We do have a decent storm system moving through the northwest as we start the week, with some mountain snow and valley rains all the way down into central California, lingering lake effect and snow showers into the northeast, but most of the southern tier of states nice and dry. As we head through Wednesday, then that western storm comes across the east, not as strong as it was out west. Looks like just some lake effect snow showers and a little snow in eastern Canada, some rain showers into parts of New England, maybe into the southeast. There could be a storm system over the Gulf. We'll have to watch that later in the week, but then the next storm system coming in out west. By Friday, though, look at that. High pressure dominating most of the lower tier of states, just some minor systems moving through the upper tier, causing a little bit of rain and snow. Our longer range forecast coming up in our next half hour.
Thanks, Mike. Well, it was another down week for many commodity markets, but is it still the hangover from USDA's latest report or something more? We'll ask Joe Vaklovic and Dan Huber after the break.
U.S. Farm Report is brought to you by Delaro. New Delaro fungicide for corn and soybeans can help you get the edge you're looking for to achieve personal best yields. Delaro, keep raising the bar.
Well, welcome back to U.S. Farm Report. Here with me now, Joe Vaklovic and Dan Huber. Dan, let's start with you. On Friday, actually saw some positive action in both grains and soybeans. You know, what sparked that at the end of the week?
Boy, I tell you, it really wasn't a lot in the news. I do think the dollar broke back a little bit today after some strength, which probably helped out a bit. But I think as much as anything, we've been pushed down to the lowest level in corn we've had in over a year. And I think shorts are just becoming a little uncomfortable. There's no real good reason to keep pushing it down. That's not going to stimulate more demand. And I think they got a little uncomfortable, started covering the shorts.
You think that's what's going on, Joe?
I hope so. We have not, we never really saw a harvest low this year. You know, in a lot of years, you'll see a harvest low in corn posted around October 1st, and you just didn't get that. I think the reason is the yield number. It just crept up on everybody. And as of 10 days ago, a lot of people still thought the corn yield nationally was 171, 172, and then USDA tells us we're 175 and change. So the market was very, very, very late this year to discover just how big this crop was, and that's why it's taken so long to find some sort of bottoming action or harvest low, if you want to put it that way. And I don't know if we've seen it yet or not.
Dan, you know, when the August report came out, no one wanted to believe USDA's number, right? There's no way that our corn yield is that high. And we tried to discount it then, and we did the same, you know, coming out of that report. And then this latest report, I mean, you can't argue this number, right? I mean, we're pretty much locked in.
Oh, absolutely. You know, and again, granted, the next number will be January. Traditionally, they tend to make a few tweaks there, but nothing really significant. So, but exactly right. You know, when you look at what happened this summer with the drought in the northern plains, which really extended down into Nebraska and western Iowa, here in northern Illinois, I mean, we were exceptionally dry in the latter part of July and August, and still we have this above average record corn yield. It really is a testament to the technology that has improved these hybrids that are out there. So now we don't want to be lulled into thinking that nothing bad can ever happen to corn. I think that sentiment is becoming stronger out there, which is about when you get a shock. But for this year, boy, we threw a lot of nasty weather at it. We still came out with an exceptional yield.
Yeah, if we would have had widespread rains in July and August, I can't imagine what this yield would end up being. But when you know what the trade expectations were, no one thought that we were going to see a new record yield.
No.
So how does that kind of change the carry-out picture? You know, and how much cushion do we have at this point with these larger than expected yields?
Oh, we've got a ton of cushion. We've got more corn than we know what to do with. The question here is what type of demand improvement are we going to see given lower prices? And you've got to hope for big demand. I mean, we've got to hope for not only increased usage for ethanol and for feed usage, we've got some maybe bigger cattle numbers coming our way. We've got to hope South America runs into a weather problem and then we can export some more corn. I mean, that's really how you fix this thing. Maybe a currency shift would help that cause, but yeah, we've really dug ourselves into a hole here.
You know, we keep saying we need demand, and we look at these trade negotiations that are going on right now. But Dan, is demand enough? Can we find enough demand, do you think, to chew through this massive supply?
You know, demand will certainly be the stabilizing factor. And it is one that tends to be overlooked when we have the supply mentality, which is really where we're at. And, you know, that's not unusual. I mean, supply mentalities dictate the market 20 out of 30 years. Now, that said, you know, look at what's happened in the last decade. I mean, corn demand's up 30%. Bean demand's up 50%. So, I mean, we have built the foundation to where if there is a supply issue, things are going to get exciting, but we just don't have a supply issue yet. Now, will that happen in South America? You know, with the concerns of La Nina, there's a little bit of risk out there, but, you know, to a large extent, you have to really think it's going to be next spring before we start building excitement in the market once again. So
let's say we don't have a supply issue in South America. How much of a demand jump do we need to see?
You need a lot. You need a lot, and I don't know where it's going to come from, and that's part of the problem. And that's why I think bullish sentiment in the corn market is some of the lowest we've seen in years. I think attitudes are very, very poor. The funds are record short this market, so everybody's really loaded up and kind of negative right now. And maybe that's how you post a bottom in this market finally. I'm not quite sure.
Well, we know a lot of farmers are holding on to the corn, just they were hoping for better prices, right? So we need to take a quick break. But when we come back, we'll get Dan and Joe's thoughts on if you do have corn left. I mean, not only from last year, but you look at this year's crops, what options do you have at this point? Let's take a quick break, and then I'll ask them that after the break.
Receive a free trial of the Daily Grain Plan newsletter from Roach Ag Marketing. Text Roach to 31313. Start your subscription today by texting Roach to 31313. U.S. Farm Report is brought to you by QLF. For 40 years, QLF has been proud to support American farmers that feed the world.
Welcome back. Well, we've been talking about this large corn supply that we have on our hands. You know, for those farmers out there that still have a lot of corn in the bin, kind of are contemplating, what do I do at this point? I kind of need some cash. What advice do you have for them, Dan?
Well, realistically, if you've got it tucked away in the bin right at this point, the market is offering you a tremendous amount of carry. So, I mean, I think if you, now granted, if you have immediate cash flow needs, you know, your choices are or to go out and take a loan, you know, maybe go to your FSA office. It's not great, but go ahead and take that. But, you know, if sell into the July futures, look for the basis improve. You can still manufacture $4 corn out of this, but it's going to take a basis improvement against those July futures. So utilize that carry, which is really what it's for, is to pay for that storage and give yourself a return on it.
Joe, is that the strategy you would take?
That's a very viable strategy. The carry in the market's the best thing you got going for you. The other thing to remember is that option volatility is very low. If you're somebody who likes to re-own a sale using a call option, volatility is the lowest it's been in, what, 10 or 20 years. Mm-hmm. The one thing that I will say about it, and this isn't to say that I'm friendly to the market, but I don't believe that I've ever had luck with a short position or a sale when the funds are near record short the market. Mm-hmm. I just don't know that that strategy's ever panned out for me. So just keep that in mind. We're in a situation where historically sales and hedges just don't pay.
But, you know, on Friday when we saw some decent action in some of these markets, is that something that we should be taking advantage of, kind of some of these short-term rallies that we're seeing, or not at this point?
You know, I think they're kind of teasers at this point. I mean, even though we had a rally, we didn't change the fund position significantly. You know, there's the old adage that if the Bears get turkey for Thanksgiving, the Bulls get it for Christmas. And I think there's some belief and truth in that, in the respect that if they come in heavily short into Thanksgiving, end of the year coming up, they want to take that money off the table, which could give us a little better rally than maybe, you know, 10%. I'm not saying anything more than that, but even a 10% rally in corn right now is 30 cents.
Right. So. Well, and we also saw a decent rally in soybeans on Friday. So, you know, that soybean picture right now, USDA didn't adjust yield really, but kind of, you know, how is demand panning out right now? Do you think there's still a story in soybeans?
I think there could be a story. I think that processors, end users in the U.S. are having a little bit of trouble securing what they need. I think basis levels have improved a little bit. This period from mid-November through the end of the year, sometimes even into January, is one of your more friendly times of year from a seasonal standpoint. So the seasonals here are kind of friendly. Any little South American weather hiccup is good for 50 cents to $1 on soybean futures. So I'm halfway optimistic that better prices are in the cards here.
Dan, do you think soybeans can carry corn as we head into the new year? If we do see more life in the soybean market Is it enough to bring corn up with it?
You know, it certainly eliminates some of the pressure that could come if we didn't have a well-buoyed soybean market. You know, granted, in soybeans it will continue to be the 800-pound gorilla being China. Is their demand going to stay there? Are they going to shift to South America? And what Joe says, boy, if the weather in South America is going to be completely, the market is going to be completely dependent on that happening, or not. The other side, though, on the soybeans is, you know, with protein content down in the meal, with oil content not yielding as what it should be, at least compared to historically, that should stimulate just a little bit better demand from the crush side if we're going to keep the same amount of protein out there. So minor fact, but again, weather is the name of the game, and it's South American weather at this point. So.
Well, you know, a lot of us in the U.S. are watching these NAFTA negotiations, and we continue to talk about it on the show. But, you know, when you look at the trade and you look at those folks down at the CME, do you think they care? Are they watching? I mean, is that impacting price at all right now or not?
I think they'll care when it matters. And to this point, we've seen no tangible evidence that anything's changed. So, no, I mean, I guess it's maybe a slightly bearish factor psychologically. But for the moment, is NAFTA negotiations the reason why corn's stuck at $3.50?
Right.
No, it's not.
All right, Dan, you agree?
Well, absolutely. You know, it is a psychological impact, and if something positive came out of NAFTA, it might lift a little weight from the markets, but certainly it's not a direct selling impact right at this point in time. So, but you know, keep it in perspective as well. Markets never bottom because the news turned bullish. It bottoms when it's the worst. We've got it all factored in, and then it doesn't take much of a positive change to start lifting us away from there.
Fingers crossed. All right, we need to take a short break and then we'll get your closing thoughts. Don't go anywhere.
U.S. Farm Report is brought to you by Credenz soybean seed from Bayer, designed using smart genetics with tailored varieties to fit any field condition.
All right, welcome back to U.S. Farm Report. Time now for closing thoughts. Dan?
You know, certainly not a time to panic. You know, granted, I think most people are feeling a bit depressed about things, depressed about the prospects out there. But, you know, this is really time to get down, clean house, make sure you're running an efficient operation. Use the opportunities that are out there. Use the tools that are available. And I think that's, if nothing else, this is the time to really brush up on your marketing skills, your risk management skills, and set the stage for when those opportunities come, know what you want to do with them.
Joe?
I think there is a possibility that we see a short covering event in the corn market between now and the end of the year. If that happens, you've got to take a very serious look at the deferred contracts. And I'm not only talking July 18 and September 18, I'm talking December 18, I'm talking spring 19, summer 19 contracts. If there are sales or pricing that you can do that makes money on the farm, it's a good time to get a little bit locked in. Hope it's wrong.
Yeah, all right. Thank you both. John Phipps joins us next.
U.S. Farm Report is brought to you by the Enlist Weed Control System. More weed control, less drift and volatility, maximum yield potential.
Well, our marketing discussion this week focused a lot on these big crops that just seem to be getting bigger, and it's creating a sobering outlook for the year ahead. Here's John Phipps.
Okay, I thought I'd let the dust settle and my pulse rate go back to normal after the surprising crop report last week. Producers can count on some sober marketing seminar presentations with unsettling graphs and tables this winter. Basically, we not only have a lot of corn, we keep growing more. And this is pretty much the case for soybeans as well. I will let our market experts sort out possible solutions to the pricing problem such a huge crop causes. What could be more concerning is how farmers respond in 2018. This is a little easier to predict, I think. Most Midwestern producers like me simply have no room to adjust. Next year, we'll grow corn and soybeans regardless of the price. I have always felt this lack of options is one of the largest causes of frustration during times of low prices. This is also the point where simple economic theories begin to be less helpful. As price drops, supply should drop, but for the most part, that simply doesn't happen for these commodities. Without any room to maneuver, farmers will be hoping for some intervention by government or weather to slow production. While one or both could occur, it is unsettling to say the least to try to make a business plan that requires an unexpected outside force to make it work. So I expect two consequences of this predicament. First, if you thought talk about weather and crop conditions was loud and furious this year, wait till the summer of 18. Second, producer attention to the Farm Bill process in Congress will intensify to a level we have not seen in decades. It is easily possible to have another huge crop of these commodities next year. Farmers will be reluctant to imagine that future, and I don't blame them. We will be quick to label ideas of even worse supply-demand imbalances as unhelpful pessimism. But it would be gross negligence by any manager not to plan for a highly likely outcome and to concentrate instead on long-shot possibilities.
Thanks, John. Well, as he mentioned, it's lower grain prices. That's the reality today. But what can farmers do to survive? That's after the break.
U.S. Farm Report is produced and distributed by Farm Journal Broadcast. From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome back to U.S. Farm Report. This November weekend, as we head into the Thanksgiving week, we have a lot to cover. It's a dire situation for some in farm country, but one banker says it's not time to panic. Better than expected yields is translating into better than expected equipment sales. We're on the road with Machinery Pete. Well, it's a tractor that's rarely found in the U.S. as it's Argentinian made. And John Phipps has more thoughts on younger and smaller farmers aspiring to grow. Now for the headlines. As the House and Senate versions of tax reform try to survive the budget hatchet in Washington, there are mixed reactions from the field on whether the proposals are good for agriculture. For the first time since the 1980s, a massive tax overhaul was passed in the House Thursday. GOP claiming a major legislative victory, making the president's tax plan one step closer to reality.
Today was a major step forward.
But tax reform still faces hurdles as the tax and Senate versions contain major discrepancies. One of the biggest differences is with the estate tax. Farm CPA Paul Neefer says the tax reform proposals are fairly good for agriculture, but some farmers and ranchers could end up paying more in taxes.
What we're really seeing is on the Senate side, they have a deduction, and for most farmers, they're going to see a reduction in their tax bill of maybe for their farm income of 10 to 20%, somewhere in there. Over on the House side, the lower income farmers and the higher income farmers will see a reduction. The ones that are in the middle, that 100,000 to 200,000 range, they're actually going to see their tax bill potentially go up almost 10%.
Neefer also says bonus depreciation could now apply to both used and new equipment.
Agriculture's national forecast is brought to you by Kawasaki and the new Mule Pro FXR side-by-side. Ride like a boss with high-end styling and rugged capability.
All right, meteorologist Mike Hoffman is back again, this time with a longer range look at weather. Mike?
Thanks, Tyne. Let's take a look at the jet stream. First of all, it does look like it's going to be cold for the eastern portions of the country for most of the next couple of weeks anyway. Trough in the Great Lakes as we start this weekend and head into the week. Then you can see it kind of goes zonal. Another trough kind of digs through the Great Lakes by the middle of the week. The ridge builds in out west again, and as we head through Friday, look at that, another trough digging through the ridge, and as we head into next weekend, that brings a trough into the plains and the Great Lakes as we head towards Saturday and Sunday. So that looks like the pattern for now with fairly mild weather out west, and that's my outlook for the next 30 days. West Texas, most of the Four Corner region, most of California above normal temperatures, below normal for the northern plains, all the way down to the Ohio River northward into central Canada. Precipitation over the next 30 days looks fairly tranquil and dry through the southern tier of states, above normal in the Pacific Northwest, and there'll be some systems eastward across the plain states, but it looks near normal for most of that area. Tyne?
Thanks, Mike. Pressured prices. It's the brutal reality in farm country today, and now more ag bankers are restructuring farm loans. The latest Rural Main Street Index fell to 44.7 from October's 45.3 reading. That continues to be below growth neutral and a trend that continues over the past 3 years. But the RMI surveys bankers in a 10-state region, and this month the bankers were asked how they're responding to the downturn. 53.1% say they're increasing collateral requirements, 22.5% say they've rejected a higher percent of farm loans, and 34% indicated no change. Well, during the Ag Bankers Association annual meeting this week in Wisconsin, there was a lot of talk about markets, trade, and finding ways to help farmers and ranchers survive. And while the outlook on prices may be grim, one ag banker says it's not time to panic yet. As grain comes crashing in this fall, the yield story is turning out to be very similar to 2016.
As the saying goes, history doesn't repeat itself, but it sure does rhyme. This year rhymes a lot with what we experienced last year.
It's very much deja vu all over again. We're standing here again saying yields are better than expected.
But as protein prices pick up, it's changing USDA's outlook on net farm income.
So 16 may have been an inflection point for us. 17, we're starting to see it pick up a little bit. Now, it's not all operators are going to tell you that story.
On the grain side, some farmers are riding out the turbulence better than others.
The producers that are faring the best are the ones that are doing a good job in understanding their break-evens. And they're the ones that are looking, even in these times where rent is still higher than it should be, they're looking at realistically, is it time to not farm some land because it's not contributing to the well-being of the operation, it's serving as a drain on cash.
Hoskins says in southern Illinois and Indiana, there are 4 farm auctions over the next month, a sign that shows the financial stress that's consuming farms today.
And I would say that while it is not a widespread wheels are coming off, I think there are definitely some producers out there that through discussions with their bankers, through discussions with their accountants, that are recognizing they've built some good equity and maybe it is time to exit the production marketplace.
While it's not the 1980s, the cycle of depressed commodity prices is something agriculture just can't break.
Nobody wants to live in this environment forever, so we've got to find some way to unlock some of these demand factors to move more of our grains out.
Economists like Daniel Sumner of the University of California say withdrawing from trade deals like the Trans-Pacific Partnership isn't helping boost that demand.
And when you look at a place like Japan, for example, they have free trade agreements with Europe. We don't. If we don't get something there, we're at a competitive disadvantage.
As economies around the globe grow, the U.S. economy is also finding footing.
Well, I think we just got through our 100th or 101st month of consecutive growth. So this is a long recovery that certainly hasn't been robust by historical standards, but it's been long, it's been continuous. We're starting to see that growth spread to many sectors.
Agriculture is hopeful the strength behind both the U.S. economy and economies around the globe will spill over into U.S. ag.
Well, I think we're going to have to sustain a few more years of the current economics. I think this year and 19, there's probably not enough to move the needle. There's not going to be enough demand over the next 2 years to eat up all the supplies. We have record stocks for both corn, soybeans, and wheat. So it's going to take a few more years to churn that out.
For farmers and ranchers looking at a dire situation, just trying to survive, bankers like Hoskins say don't panic.
First and foremost, look at each piece of land that you operate. Determine if it is adding to or detracting from your overall cash flow. Perhaps you can decrease in size and become more profitable by doing that.
While the situation may be ripe for some farmers to walk away, others will find a way to survive through grit and the will to endure. Now, both Hoskins and Takish say one area farmers and ranchers may be able to trim is living expenses. Hoskins even suggests setting up a separate account to just manage those expenses. Up next, John Phipps.
Your call is very important to us. Please hold.
Well, John Phipps recently gave his opinion about smaller farms as well as younger farmers. But not everyone is on the same page as John. He rejoins us from the farm.
Doug Hilme from Falcon, Missouri disagrees with my advice to young farmers. I thought your comments to the viewer from Walker, Missouri were off base. Starting out with a small piece of land and learning to grow your own farming business is very doable for the person who is determined. There are many other careers in agriculture besides corn and soybeans. Doug also pointed out that livestock, such as cattle or goats, can be an alternative source of income. He makes a fair point. I focused my answer on the problem of growing a small farm more than making profit, which is certainly feasible for small and part-time farmers. The issue I hear most about from young farmers, however, is how to make the transition from a small operation to one that can become a viable business. For this to happen requires overcoming a difficult and expanding problem. Maybe this graph of income and farm size can kind of help illustrate my thinking. Consider a family with 2 wage earners making the same salary with a small farm of some type, crops or livestock, on the side. Let's assume they earn enough from all 3 sources to comfortably support their families. Many small farms stay right in this configuration, and it's a good place to be economically. Many younger farmers, however, want to get bigger, since farming is what they love most, and that's where it gets sticky. The first small increment, to say twice as many acres or head, can usually be done by stretching available labor and resources, but expanding beyond that point will require both more time and capital resources like machinery or breeding stock. It will also eventually force the choice of ending full-time employment or hiring labor. In my example, one spouse quits to farm full-time. This economic friction gets worse because each dollar invested in the farm will typically generate progressively less profit. Farming is very capital intensive. In my admittedly simple example, the spouse who quits their job to grow the farm will need to expand to far more than most anticipate. The resulting income chasm, as I call it, between a manageable part-time farm and a profitable full-time farm can be long and will require funds from somewhere, either debt or savings. Worse still, in times of low prices, the duration of that chasm increases. Even if a small farmer gets a windfall of acres or livestock, the investment needed just to operate would be a challenge to cash flow. The bottom line is there are hundreds of thousands of viable small farms. Growing them to economically sustainable commercial operations is difficult and rare in my experience.
Thanks, John. And if you have questions or comments for John, email him at mailbag@usfarmreport.com. Well, when we come back, it's the better than expected yield story playing out across farm fields this year, and it's helping move machines in Illinois. We're on the road with Machinery Pete next.
On the Road with Machinery Pete is brought to you by John Deere. Nothing runs like a deer.
Well, it's a saying we continue to hear from farmers across the country. Yields aren't just good, but better than expected. But it's that surprising momentum also showing up on the dealership lots, like William Noby & Company in Waterloo, Illinois. That's where we're off to this week as we head on the road with Machinery Pete. For Daryl Cates, Harvest 2017 is now in the books.
It was a real, rather easy harvest this year.
And as he looks to 2018, he's reflecting on a harvest outcome he didn't expect.
Yields were surprisingly better than I was expecting. Beans, I don't know where they came from because we went almost 2 months without any rain.
It was that dry summer that Cates thought robbed his crop of yield.
On the beans, especially, at one point I was a little nervous because when they were over $10, I was pretty aggressive and I had sold 80% of my crop. And so I was a little nervous of whether or not we were going to make that, but no, we've actually got a few more yet to sell.
It's the better than expected storyline playing out in fields across Illinois.
We've had some parts of our territory, it's like right here as an example in Waterloo, it's been extremely dry. And I guess what I'm hearing more so than is everybody is saying it's better than they expected.
With better yields come better outlooks on farms, and that's motivating some farmers looking to buy larger equipment like combines.
We ran a promotion actually in end of July into August and tried to get after some of the S-Series combines. We had a lot of those. Our goal was to get from 41 down to 25, and we got to 29, so that was pretty close. Anyway, we were happy with that.
I think the demand is obviously greater than we thought there would be, considering commodity prices where they're at right now.
Even with better yields, not every farmer is eager to buy.
I think we're going to hold off one more year now.
But for those farmers anxious to upgrade, Machinery Pete says values are finding footing.
Used combine values are kind of in a holding pattern. And it surprises people when I tell them that. They assume, times have been tough here the last few years, values must be dropping a little bit. But actually what we've been seeing on the auction market, values pretty much flat. going back to like the start of 2016.
As values look to be on solid ground, he says more buyers are coming online.
It's fascinating to look at the search traffic data, and I'm finding that it correlates very closely with the auction price data. So if we isolate combines and looked at the third quarter of 2017 and compared it to third quarter of 16, I think the statistics are something like it's 30 to 40% increase that we've seen this year. So to me, that speaks to the solidifying of the combine market.
A very clean, low-hour machine.
We have more people looking for used combines this time of year.
No matter the hours, Machinery Pete says it still comes down to condition.
And as we come to the end of 17, what we're seeing is if a combine is in really good condition at auction, there's a surprising amount of heat on those when they come up for sale.
Combines this year chewed through hefty crops. And with potential tax cuts on the table, the rest of November and into December could be a good time to buy.
I actually just talked to our CPA yesterday about that, and he actually does farm equipment dealers as well as farmers. And he's encouraging all his customers because of the potential tax cuts that are coming, that it might be, he's expecting a good finish on 2017 actually.
The ups and downs of agriculture is nothing new, and considering Noby and Company has been around for more than 100 years, they've seen it all.
We actually started out with all the horse-drawn equipment.
From horse-drawn equipment to controlling parts of a combine from a smartphone, technology is opening the door for more than just better yields.
What's interesting about the technology is you got to be a little more educated buyer now, because what you have for implements or what you have for existing equipment, you know, when you're going out and looking for machinery, you got to make sure that what you want fits what you need.
And it's what's next that's already on Noby's mind.
I think even farmers would tell you that that's the wave of the future, is being able to remotely monitor machines and service machines.
He says it's that piece that's been a challenge, but as the technology evolves, its challenges cultivating opportunities on farms that could ultimately raise the bar on farming yet again. Well, when we come back, Machinery Pete rejoins us for a rare find here in the U.S. Tractor Tales is next.
Tractor Tales is brought to you by John Deere. Where can you find the most comprehensive inventory of John Deere certified pre-owned tractors, combines, and sprayers? MachineFinder.com. Sometimes the best new addition to your fleet isn't new.
Welcome back to Tractor Tales, folks. We are in Waterloo, Illinois this week, checking out a very interesting tractor, a John Deere 730 made in Argentina. And I'm here with Derek Gregson. And Derek, man, tell us about this tractor.
Well, it was built in Argentina, like you said. Don't know the exact year of it, but they built them down in Argentina after Waterloo quit building them up here in the States. I heard they built them up to early 70s. Tractor's nothing like this one we got. It was pretty rough.
What did it look like?
It was rough. I mean, there's tires that were bolted together. The rear door on the cab was missing. The windows, some were cracked and some were missing. It took quite a bit to go through it.
Now, Derek, you and your dad have over 100 tractors. Was it the unusualness of this one that attracted you?
Yeah, it's that cab. That's kind of something different to meet up with people, and nobody's ever seen anything like it usually. So.
What do people say when you take it out and show them? They must get a strong reaction.
Yeah, it's quite the eye catcher. Yeah, everybody goes on about it. Never seen nothing like it. You can crack the windows, the wing windows open, and the front windshield lays out a little bit, so you can get air flowing through it. Dad and my son took it on a tractor drive, and he said it's pretty comfortable on Labor Day weekend. So the tractor came with one tire. Actually, it says made in Argentina on it, and when we got it, we asked the guys if they could try to track down another one, and sure enough, they came up with an identical match to the one that was on it. So we got the rear tires are Argentina built, made. The front emblems are different. They got the JD on down in Argentina instead of leaping deer on them.
Thanks for that, Greg. Well, today's Country Church salute goes to the Presbyterian Church located in Virginia City, Nevada, which is actually the oldest church in the state of Nevada. They tell us it was built in 1866 and is still a functioning church with services held every Sunday. Our thanks to Sylvia Fozzi for sharing her church with us. Stay with us. We'll share viewer photos up next.
U.S. Farm Report is brought to you by Kubota. Learn more about Kubota SSV Series skid steers at Kubota.com.
Welcome back. Well, there's a lot to be thankful for heading into this Thanksgiving week, and good yields is actually one of those. Mary Fisher sent us this picture in rural Arlington, Minnesota. She captured it on Roger Fisher's farm at the end of harvest. She says, you know, Mike, yields are great, but prices could be better. And, you know, that's a story that we're hearing from everyone this year.
And that's probably true a lot. And Brian Rack wanted to share a glimpse of the future of agriculture. This is a picture from Career Day at Borculo Christian School in Zeeland, Michigan. You can see Brett, an 8th grader, Caden, who is in 6th grade, and Nathan, a 7th grader, is on the right. Nathan's dad, Brian, says there's nothing better than the boys having an interest in farming and wanting to be farmers when they grow up.
Definitely. Thanks, Mike. Well, next week we want to invite you to join us for our annual Harvest of Thanks special. There's no doubt this year's been a challenge, not just with prices, but from wildfires to hurricanes. Farmers and ranchers are showing their will to persevere. We'll share some of those amazing stories next weekend on U.S. Farm Report.
From all of us here at U.S. Farm Report, I'm Mike Hoffman.
And I'm Tyne Morgan. Be sure to join us again right here next week as we work to build on our tradition. Have a great weekend, everyone, and a safe Thanksgiving.
U.S. Farm Report has been brought to you by Ram Commercial, America's longest-lasting heavy-duty pickups. U.S. Farm Report is produced and distributed by Farm Journal Broadcast.